Welcome, Money Magnets. Today we want to speak about a fun topic, creating multiple income streams. We all know that relying on just one income source can be quite risky, especially in today's unpredictable world. So let's explore how you can spread your financial wings and bring a little more stability and freedom into your life.
That's the spirit. Diversification is more than just a buzzword in investing. It's a financial strategy that applies to your entire income. We've all heard the saying, don't put all your eggs in one basket. And when it comes to your finances, that advice couldn't be more relevant. So let's break down how you can diversify your income streams, especially here in South Africa, where the opportunities are vast and varied.
Let's start with why diversification is so vital. Picture this. You've got a secure job that pays well and you're comfortable. But what happens if your job suddenly disappears? Maybe the company downsizes, or you face an unexpected illness. Or, I don't know, a pandemic hits the world out of nowhere. We've all been there. No one saw that one coming and even thought something like that would not be possible. But many of us lost our jobs during lockdown. So when your only source of income dries up, it can be a massive financial shock.
Exactly. And that's why having multiple income streams is essential. It's about building a financial safety net. If one stream dries up, you've got others to fall back on. Before we go into more details here, I would like to quickly explain the difference between active and passive income. An active income is money you have to actively work for, meaning spending your time to earn money. A passive income is an income source that you have to work for once, and it keeps generating money without you having to spend your time on it.
Since we all have the same 24 hours, having only an active income means your earning capacity is limited, even if you have a high salary or hourly rate. There is only so much time you can spend working. A passive source of income, on the other hand, is often rental property, shares at the stock market, or a scalable product, meaning you buy or create the investment once and then it keeps giving money to you. It doesn't mean you never have to spend time again on your investment. You do have to maintain it, but it is a lot less time than actively earning an income.
One of the more traditional but effective ways to diversify your income is through real estate. Owning rental property can provide a steady stream of passive income. South Africa has some great opportunities here, especially in growing urban areas where rental demand is high. Websites like Private Property and Property24 make it easier than ever to explore the market, whether you're looking for a small apartment in Cape Town or a townhouse in Johannesburg.
Real estate can also offer long-term capital growth. While property prices fluctuate, South Africa's property market has shown resilience over the years. And should you decide to sell your property, you can expect to sell at a profit. Usually, the longer you hold on to the property, the higher the profit. However, it is important to do your research, understand the risks, and be aware of the maintenance and management responsibilities as well as costs that come with property ownership.
Property also comes with a substantial price tag. When you're investing in real estate, it's not just about the purchase price. You've got to consider all the additional costs that come with it. Things like bond registration fees, transfer duties, and legal costs. Then there's ongoing maintenance, property taxes, and potentially even levies if you're buying into a sectional title. These expenses can add up quickly, and they will eat into your profits. That's why doing your homework and understanding all the financial commitments before diving into it is very important.
And let's not forget the time and effort involved. Managing a property, whether it's a rental or something you plan to flip, takes a fair amount of work. You need to factor in things like tenant management, repairs, and even potential vacancies that can impact your rental income. It's definitely not a hands-off investment, but if you are prepared for the responsibilities and costs, property can still be a solid way to build wealth in the long run.
One more thing to point out. Owning property is only an investment and source of passive income if you rent it out. Buying your own home is a lifestyle choice. Yes, it will most likely generate a profit when you sell it again, but it does not create a regular income over the years. The only way to do so is if you rent out a spare bedroom on Airbnb, for example. Or if you're lucky enough to have a granny flat on the property you live on, then you could rent that out too.
Now let's dive into side hustles. This is where things get exciting because side hustles are all about turning your passions into profit without you having to give up your day job. The beauty of a side hustle is that it's flexible. You can scale it up or down depending on how much time and energy you have.
In South Africa, we are seeing a boom in side hustles. Whether it's in selling handmade crafts on Etsy, offering consulting services, or starting a small online business, the opportunities are endless. Let's look at some popular side hustles that are really taking off in South Africa.
First up, let's talk about online selling. Platforms like Facebook Marketplace have become go-to places for selling just about anything, from secondhand goods to homemade crafts. If you got a talent for creating, why not turn it into a business? For example, if you're good at painting or crocheting, you could start with that and sell your products online. The key is to find something you enjoy doing so it doesn't feel like work.
Another fantastic side hustle is freelance work such as gig economy. This is a free market system in which temporary positions are common and organizations hire independent workers for short-term commitments. This economy is thriving, with apps like Upwork and Freelancer offering opportunities to make money from your skills, whether it's writing, graphic design, or even virtual assistants. What's great about these platforms is that they connect you with clients from all over the world, so you're not limited to the local market and can earn in dollars or euros.
Let's not forget about the gig economy in a more local sense. Driving for Uber or Bolt can be a great way to earn extra income in your spare time. If you've got a reliable car and some free evenings or weekends, why not turn the time into money? Plus, it is a flexible gig that you can fit around your existing commitments.
Another side hustle that's gaining popularity is content creation. Whether it's YouTube, Instagram, or TikTok, creating digital content can be both fun and profitable. South African content creators like Michlali Nvasi and Lasiswe Dambusa have turned their social media platforms into full-blown businesses. It takes effort and creativity, but if you're passionate about something, there is a good chance you can build an audience and start earning.
And let's not forget about online courses and digital products. If you're an expert in something, be it finances, cooking, fitness, or anything else, you can create an online course or ebook and sell it through platforms like Udemy or even your own website. This is a great way to generate passive income, as you create the product once and then you can sell it over and over again. That is the definition of a scalable product. It does take time and commitment though, so you better love what you're doing.
Another strong avenue for generating passive income is the stock market. In South Africa, we have the Johannesburg Stock Exchange, or JSE, which offers access to investing in a variety of sectors, from finance to mining to tech. South African platforms like EasyEquities or Satrix have made investing accessible to everyone, even if you're starting with small amounts. You can buy individual shares of companies or exchange-traded funds, ETF for short. All you need is an account on an investment platform, and the world is your oyster. Just like with bank accounts, you can have accounts on multiple investment platforms, including international ones giving you access to investment options around the world, not just locally.
We are a big fan of ETFs, which are funds that copy an index at a chosen stock market. So instead of buying a share of a single company, buying a share of an ETF means you have diversified your risk greatly, as you bought into all the companies in different industries that the chosen index covers. This is what makes them so perfect for beginners. For instance, the Satrix Top 40 ETF invests in the top 40 companies listed on the JSE, giving you exposure to some of South Africa's biggest and most stable companies. By the way, this is just an example, not a recommendation.
But before diving into choosing your ETFs and shares, it's essential to have a strategy. The stock market can be rewarding, but it's not without risks. Without a clear plan, investing in the stock market becomes a gamble. You might find yourself making impulsive decisions that could cost you dearly in the long run. With a plan, it's more like counting cards in a poker game. Your chances of success increase drastically. And unlike counting cards in a casino, having an investment strategy is not only legal, but also highly advisable.
Knowing your risk tolerance, setting your investment goals, and understanding the market are all key. If you're curious about how to get started or want to refine your approach, our course would be the perfect fit to help you build a solid foundation in just 9 weeks. Have a look at our website for more infos.
But shares and ETFs are not the only options out there. Another interesting option is unit trusts. These are similar to ETFs, but are actively managed by an investment company such as Allen Gray and Coronation. Instead of following an index like ETFs, these funds are crafted by investment managers and also offer a diversified portfolio of assets catering to different risk profiles and investment goals. Since they are actively managed, though, their fees tend to be higher than that of ETFs.
And then there's the more alternative side of investing. Have you ever heard of peer-to-peer lending? Platforms like Rainfin allow you to lend money directly to individuals or small businesses and earn interest. It is a bit riskier than traditional savings, sure, but it can also offer higher returns if you're willing to do your homework.
For those with a green thumb, agricultural investments are another option. South Africa's agricultural sector is vast, and there are opportunities to invest in everything from livestock to wine production. Companies like Fed Group offer investment options in farming projects, where you can earn returns based on the yield of the crops or livestock.
And of course, we can't forget about real estate investment trusts, REITs for short. If you want exposure to the property market without the hassle of owning physical property, REITs are a great option. They allow you to invest in a portfolio of properties through the stock market, whether it's commercial, residential, or industrial. Companies like Growthpoint or Redefine are major players in the scene.
Finally, let's talk about gold. South Africa has a long history with gold, and it remains a popular investment. Whether you're buying physical gold or investing in gold ETFs, it's a way to diversify your portfolio and hedge against inflation. The price of gold tends to rise when other investments fall, making it a good balance in your investment mix.
With so many investment opportunities in South Africa, it's clear that diversifying your portfolio is key to build long-term wealth. We believe strongly in the power of diversification. Remember the eggs in one basket? Just like you shouldn't rely on one source of income, buying into as many companies in different industries and countries also lowers your risk of losing money at the stock market significantly.
And ETFs are one of the best ways to do so. Not only can you start investing into them with little money, which makes them accessible to just about anyone, but they also have lower annual costs than most other investment options. Once you have educated yourself on how they work, maintaining your ETF investment requires minimal effort. They are as hands-off as it gets while still offering the potential for steady growth.
Another critical aspect of investing is ensuring that you have a solid emergency fund. This is often overlooked, but it's foundational. The saying, no risk, no reward, is particularly true when it comes to investments. So no matter how small, there's always the risk that you might lose a large portion of your investment. Therefore, having a simple interest-bearing savings account with your bank will offer you a cushion. This way, you're earning interest while keeping your funds easily accessible in case of emergencies. Just make sure that your interest is higher than the inflation rate to avoid losing some of your money's purchase power.
So why does all this matter? Diversifying your income streams is not just about making more money. The most important aspect, in our opinion, is that you are creating financial stability and security.
When you have multiple income streams, you're better prepared to handle whatever life throws your way. It's about building a balanced financial portfolio that includes different types of assets, income sources, and an emergency fund.
By spreading your risk across different areas, you're not putting yourself in a position where one setback could derail your entire financial future. And the best part is that you don't have to do everything at once.
Yeah, start small. Maybe begin with a side hustle that aligns with your passion or invest a little bit of money in an ETF. As you get more comfortable and your income streams start to grow, you can explore more options and start building a more diversified portfolio.
This approach has shaped our own financial journeys, and it's something we strongly believe at Money Magnet. For example, I was employed full-time for many years before I started doing translation work on the side. Eventually, I transitioned to contractual work, which gave me the flexibility to focus on building Money Magnet with Alex.
Similarly, I began as a freelance translator and later expanded my skills by offering tours as a tourist guide, all while working on Money Magnet. Both of us also invest in ETFs, so we also have a source of passive income. Diversifying our income streams has been key for our financial stability, and it's a strategy we're passionate about sharing with others.
Just keep in mind that financial stability doesn't happen overnight. It's a journey, and every step you take, no matter how small, brings you closer to that goal. Whether it's starting a side hustle, making your first investment, or just opening a high-interest savings account, every action counts.
So take a good look at your skills, interests, and financial situation. The opportunities are out there. Start small, think big, and most importantly, keep pushing forward. The key is to stay flexible, keep learning, and be open to new opportunities as they come.
And don't be afraid to ask for help, whether it's from financial advisors, a mentor, or even just a friend who's been through it before. Having someone to guide you can make all the difference. The road to financial stability is much smoother when you're not walking it alone.
Thanks for joining us today, Money Magnets. We hope this episode has inspired you to take the next step in diversifying your income streams. Remember, every bit of progress counts, no matter how small.
If you've got any questions or topics you'd like us to cover, drop us a message. We are here to help you on your financial journey and are super keen to hear what would interest you.
Thanks for tuning in, and we'll catch you in the next episode. And never forget that you are a
Money Magnet!